And just like that, welcome to episode number 3, the process flow of the home renovation mortgage loans. And we're calling an audible here for this episode. Originally, we were talking about the contractor process, but we've received a lot of great questions about when do I choose a contractor? When do I go for my loan approval? When do the repairs take place? So we think it's a good point to stop and reflect for a minute and then give you guys a step-by-step process of how the loan works and break it down for you. And then we'll get on to the contractor, the consultant, and all the other pieces of the process. But it's a great point to stop right now and give you step-by-step, how does this work? So I'm gonna go ahead and cue up Mr. Brandon Baker here, and just like that, episode number 3 coming at you.
All right, everybody, before we bring Mr. Brandon Baker on here, we've got the home renovation mortgage on the process flow. I wanna walk you through it real quick so as you hear the video, you understand what's going on. So without further ado, here is the process flow. Number 1, we have the pre-qualification process. Number 2, find your home. Number 3, contractor selection. Number 4, the loan application. Number 5, the loan processing. Number 6, loan approval. Number 7, appraisal. Number 8, final loan approval. Number 9, settlement. Number 10, the renovation begins. And number 11, your first payment. So I'm going to leave this up here for a minute so you guys can see it. This is the process flow, and we will go in detail to discuss. All right, everybody, welcome to episode number 3. As I said in the intro, Brandon Baker, you're back again. A lot of fun, man.
Oh, yeah, absolutely. I'm happy to be here.
Yeah, so I was telling everybody in the intro here, kind of doing an audible because we had a few questions, comments on sort of the process flow, people really understanding. And I think this is one of the hardest things about this process is just really understanding how does it really flow. So
Yep, you're absolutely right. This is a question that we get all the time. So
yeah, and I don't think it's dissimilar to other types of loans. There's obviously some more moving parts, but I think really it's pretty similar.
No, you're absolutely right. It's I think people get the newness of it and get scared, just like any kind of LO that was learning a VA product. You know, it's just new things to learn.
Yeah,
and
exactly.
You should embrace it.
Yeah, exactly. That's what I do. Embrace the uncertainty, and it's a lot of fun. And if you're a realtor, this I think is a great video for you to kind of understand it. So I did a quick mini presentation, just PowerPoint. I pulled up with the steps real quick, so everybody kind of is aware. And so let's get through it. So the first one we talked about is the pre-qualification. And as I tell borrowers, you want to find out what you can be approved for. You're really in the driver's seat. And really, before you do anything, you want to get pre-qualified with us, because you're going to know exactly what you can afford, and we'll be able to kind of give you a lot of scenarios and ballpark things for you.
Oh, absolutely. And as we were discussing beforehand, with that pre-qual, like you said, you see how much you can borrow. And when the renovation loan comes into play, the way it works is you have that max amount, and it's like a sliding scale, like mentioned the Price is Right game.
Yep.
The less that you spend on that home equals the more of the renovation that you can do. So, so you're maxed out at $200,000. Well, if you spend $175,000, well, your renovation budget's about $25,000. So, and just again, you spend only $100,000, you have a renovation budget of $100,000. So it's just something like that to think about.
Yep, and we can do the pre-qualifications very, very quickly. I typically do them same day, or if you get it to me in the afternoon, it's usually the following morning. And then I sit down with a bar and just sort of walk them through the scenario. And I think it's real key and important too, to say, look, this is what you can afford, and what are you thinking, maybe renovation wise. And even if you don't know, we can at least kind of ballpark and say, well, maybe this is your range, 150 to 175, or 250 to 275, and you got a little bit of room here for some renovations if need be.
Absolutely. Just kind of based on what they want or what they're looking for.
Yeah, and I think once we get through this, the second step really is, I think, the most exciting for the bar, finding your home. Finding where you want to be. So
absolutely, I know that was my favorite part, was the shopping for a home. And again, with this renovation loan, had I known about it, there would have been more opportunities and more homes, I feel, that I would have been able to look at, as opposed to just looking at those turnkey.
Yeah.
So, but
exactly.
Hey, live and learn for the next time I buy a home,
Yeah, exactly. And then I think when we get to step 3 here, we're talking about the contractor selection. And I really kind of feel like these go hand in hand. Would you agree with that? Because it's important to really find the right contractor up front and not waste too much time, because time's of the essence, especially if you're going to make an offer on a home.
Absolutely. That's the anytime, if you feel that, especially with as a realtor, if you're talking to your borrower, they kind of, and you're tossing that renovation idea, network yourself. Have
Right.
that network, that you have a contractor that you have all this. It's all just that network, and you'll have that LO, and so therefore it eases that finding that contractor.
Yeah.
But you're exactly right. It's kind of find that home and kind of have your eye out for once you realize that you might be leaning towards a renovation, find a contractor as quickly as possible.
Yeah. And a good tip, what I tell people too, is I'm obviously involved in a lot of social media. So I tell people, there's groups, Facebook groups in your area, a lot of people in there. My area, for example, there's 9,000 people. And I say, look, if you're not sure of a contractor, get some recommendations from people. There's even real estate investment groups out there that you can join and really learn a lot and follow. So it's a really good thing to get out there and do that. And you get an answer very quickly. Within 5 minutes, you'll have a
absolutely. Word of mouth. Word of mouth. Just like any business, that's your friend, is a positive recommendation. So.
Exactly. And I think the next step here is step 4, the loan application process. And kind of what I tell people too is, while you're looking for a home, as your loan officer, I'm already really putting the loan application together, because you don't have that final, piece to the puzzle to plug in yet. But we're gathering your documents from you, the additional documents that we need, and really doing the intake and making sure that's all good to go. And then as soon as you basically at that point have a sales contract, I think it's one of the edges that I have, is everything's in order, and we're basically pressing the button to submit the loan app to the lender, and that's simple.
Yeah, absolutely. And like we said in earlier episodes, these are conforming loans credit wise. It's the same conditions on getting your borrower qualified, for that. And along with that application process is that max mortgage worksheet that you need to work out, because that worksheet, depending, even if you're doing a 203K or a home style, is going to give you that loan amount based upon that renovation, even if at the beginning we're doing everything by a guesstimate. And plus it gives you the fees. Like so many times we have the disclosures, the TRID, we all know it, we all love it. It's the
exactly.
That's where, if you do not disclose all the fees properly, you could be setting yourself up, and those fees come from that max mortgage worksheet.
Yep. And if you're a realtor and bar, just kind of understanding what that is. It's a worksheet, and that our lender provides us, and we actually fill out and do all those estimates. We put in information. There's obviously inspections. There's a lot of different things that go into there, and fees. And we will sit down with you at the time we do the app and go over those step by steps you were, because it's a little bit more involved than just a regular loan. Very similar the way it's underwritten, but again, just making sure you understand all the fees and how that process works, I think is really key up front.
Absolutely. Yep.
And then the exciting part happens, the magic starts to happen once the loan app is submitted. You get to loan processing. It gets submitted to to an underwriter. And what we start doing too on our end is ordering the title work at that point. So if you're a bar, you hear title company, we start getting the title work done. So that way we're moving full steam ahead at this point, and making sure the underwriter at that point is going to review the loan and get you going.
Yeah, absolutely.
And when you get to go ahead.
The processing is the same as it always is. Again, like you said at the beginning, it's just that one little extra variable that you're throwing in, that renovation piece. But that all comes. You know, there's only so much, just that bid that you need to get from the from that contractor that's
Right.
added on to that renovation.
Yep,
Everything else is
exactly. And that's
the
that
same.
stuff. Yep, and that's part of the underwriting process. They'll review the bid,
Hmm.
and I think a key point here for realtors and borrowers is to make sure, like we talked about, the bid from the
Hmm.
contractor is broken out very specifically by labor and
Yep.
materials. Want to make sure it's very clear, because I've seen some come in where they think it's okay and it's a little bit confusing. The lines might be a little bit off, but I really tell people just line it up as neat and clean as you can. It just makes it so much more smooth to go through.
Absolutely, and it goes along with that next step as we're going with that loan approval is that appraisal piece.
Right. Yep.
With the more concise and detailed that bid is, the easier it is for that appraiser to know what's going on and
Right.
get more money out of your, it, since that appraiser chooses the comps based upon what that bid is, because these appraisals are come in subject
Right.
to the completion of the renovation.
Exactly.
So the more concise that bid is, the easier it is for everybody. That appraiser more than likely is like, oh man, yeah, I've seen houses, I can choose comps based upon what's being done,
Yep.
as opposed to if you have a bid that says a bathroom remodel and that's it.
Right.
It's not going to fly. Yeah, that does not tell them anything. The more, like you had said, the more concise that bid
Yep.
is, the easier it is for everybody.
Yep. And that's good. You bring up, step 6 and 7. So we get step 6 is basically your loan approval, which
Hmm.
you get conditions like normal, where
Hmm.
the underwriter will ask certain things. Could be any number of things, credit inquiries, explain this account, or things like that. And then we get to step
Hmm.
7 with the appraisal. Now, correct me if I'm wrong. For these types of products, can you order the appraisal once you have the loan registered at that point, so you kind of move it along faster? Or does it make sense to wait for the loan approval, the conditional approval at that point, or what's easier?
At minimum, you want to have that final bid,
Right.
since that is what that appraiser uses to
Yeah.
select the comps and base that value on, because we'll know the value of that home from that appraiser, what
Right.
it's going to be after those renovations are complete.
Right.
So at minimum, you do never want to order that appraisal until you have that final bid.
Yep.
And if you happen to have that final bid at the beginning of the process, order the appraisal.
Yeah.
Nothing's going to change from that. It's all just based upon that contractor bid.
Right. Yeah. And especially to move things along, I like to make sure, when I talk to the bars, say, okay, is this the final contractor, the final bid, everything look good, get everybody in sync. And then, typically when I'm
Hmm.
getting that loan registered and submitting it to underwriting, that's when we're ordering the appraisal at that point. And even if it's, day out underwriting or two, it's an extra day that I think we gain to be more efficient and keep things, moving along. And like we had on that
Hmm.
refinance, it was like 17 days from start to finish.
Yeah.
So it was great. Very,
Yeah,
very smooth.
and you hit on a great point, and what you do that makes you successful is that you set that expectation. There's
Yep.
no surprises. Um, as you know, you've been in the industry for a while. Borrowers are more flexible when they know that something might be coming, and set that expectation. Hey, this is what we need before the process can move forward.
Right.
So then, when they're like, "Well, is it taking longer?" Well, give me that contractor bit.
Right.
We
Exactly.
that's it. So yeah, so you hit
Yep.
on a great point. Is that expectation piece?
Yeah. And one of the things that I try to do, knowing that sometimes you have some challenges with contractors, and that's, I think, in any industry, I
Yeah.
really try to meet up with a contractor. Sometimes if it's local face to face, I think that helps out a lot more, builds a trust and really builds the rapport. And if it's
Mhm.
not over the phone, really sitting down with them, making sure that they know, the time frames, like you said, the expectations as well, to really ensure that, the loan's moving. Because I think that's one of the danger areas sometimes I see where the loans take longer is the
Mhm.
contractor takes a while to get things. And especially when you
Yep.
get it through underwriting approval, you get conditions, contractors got to respond very quickly to things.
You're absolutely, and that you hit on a point where any of the horror stories that most people have heard about these renovation loans come
Right.
from that contractor piece, and that's,
Yep.
you throw a variable in there, it's going to happen.
Yeah.
But it turns out you do more of these, it becomes a rarity. And again, again, that networking piece you set up with a
Mm.
contractor that you've worked a lot, that is able to do what you need quickly and is a great asset to the borrower. You're going to use them, so
Yeah.
everybody, it's a win-win.
Yeah, exactly. And then the nice piece is when you get to step 8 here, you basically get your final loan approval. You get your conditions submitted, everything looks
Mhm.
good, and basically it's congratulations. You're basically 90% of the way there,
Yeah,
getting
absolutely.
the keys to your home. And then basically the way the final approval works is basically that. you go through and you have a sheet that says, hey, congratulations, you got final approval. And then we move to step 9, really, which is settlement. And behind the scenes, myself and my processor are working on getting, the borrower's closing docs together with the title company, the lender, doing all that work, and then getting the closing disclosure out. And for the borrower, that's very important because you'll know your final closing costs at that point. They shouldn't change too much, but there might be always some variation depending on taxes and things like that. And then, when you get that, that point, you're basically almost ready to go.
Yep, you're exactly right. And everything that you mentioned are things that are going to happen, that can happen with a standard non-renovation loan. By the time you get that appraisal, that renovation piece is already solved,
Yeah,
for
exactly.
that processing. It's done.
Yep.
Everything else is that credit conditions, and you're exactly right. Anything that happens is regardless if it's a renovation or not at that settlement, so.
Yep. And then your steps 9 to settlement. Basically, you're signing your life away with all the paperwork. You get the keys to your home, and then you move really to step 10. And that's, I think, where also the major fun begins, the renovation at that point. And I think that's one of the things people always ask up front is, okay, how does it work? And I think going through this process is really good and educational for people because the renovation process happens once the final signed docs are good, everything's done, it's settled, then at that point you move on, and basically at that point renovation begins. So can you kind of explain how that works a little bit? Once the ink is dry on the papers, how does renovation start?
So there, with these programs, renovation cannot start, like I said, until that settlement, until that loan is funded. If it's a refinance and when it's funded, but once that is, Fannie Mae and FHA sets it up that contractor needs to begin renovation within 30 days of closing.
Right.
And they have, depending on the program, like 90 days for the to be complete for the limited 203K, et cetera. So really, it's just on that. With the limited 203K, there's the contractor and the borrower gets 50% of the bid at closing.
Right.
And they get the other 50% once the renovation is complete. The other programs, if it is a little bit larger, is based upon draws.
Right.
And draws are kind of like the contractor's billing the escrow because we have all that money. They're billing the escrow saying, hey, this is what I've completed. I want a draw process on that. And so for those larger ones, you might have a consultant involved. And so they'll go out, inspect it, then the check is cut, and they get the final amount after the renovation is complete. So it's all just a flow. They're just, again, based upon the completion. So the faster that your contractor gets work done, the faster they get paid, the faster you're done with the renovation. So
exactly,
it's once it closes, it's just a standard renovation project. And contractors should like it because all that money is collected up front.
Right.
They know they're going to get paid as long as they do the work.
That's
so
it.
They don't have to worry about the borrower maybe having the money when they're complete or having to put a mechanic's lien on the home. They don't have to worry about that. With these programs, that money is there. It's for the taking.
Yeah, very easy. And I think I like how you guys do it too, and how we have it is it's very simple. And just talking to one of my borrowers who just completed this refinance, which like, it's just unbelievable how smooth it is, because she was worried about certain things, and you always worry about that factor, the contractor, what happens, and she's like, it's just been so smooth. And I think when we took at the final step here, the first payment, a lot of people are like, well, when is my first payment? Is it done after? And again, it's all about setting the expectation. Typically your first payment, you skip a payment. So for example, right now, if you settle the end of April, the first payment is June, or if you settle in May, first payment is most likely going to be July 1st at that point. So you skip that month. But renovations will be ongoing most likely in the bigger type of loans, but you'll be making your payments as normal like any other loan.
That's exactly right. These are conforming loans, so your payment is still due. Even if that renovation is going on, you're still making that house payment, because as soon as that renovation done, there's nothing that separates it from a standard conventional conforming loan.
Right. And I think a key point too, probably the last point we'll talk about here today, is just the inspections, because sometimes I think, when I hear borrowers talk, they say, okay, well, how do I know and how do I ensure that the work is going to be done, it's going to be done on time? And well, that's why there's the inspection fees, and inspections are done to make sure that things are done timely.
Yep, you're exactly right. And that goes back, like it said, with that Max Mortgage worksheet, that's where that's all worked out. So you're going to know ahead of time exactly how much is going to be in there, those inspection fees. So because we do have to pay the people to go out there, the appraiser or consultant to go out there to do the inspection. So, but that's all financeable. So it's not really an out-of-pocket expense. So
Exactly. It's right into the loan, which is nice.
That's it. It's one little easy loan there for you.
Yeah, I feel like as I'm even doing this myself, going through this again, I've been through it a bunch of times. It just seems easier and easier as I kind of go through this. And
Yeah.
wow, this is real easy. I like it.
Yeah, and that's what's great about your series that you're doing is just once you break it down and see the individual pieces, it is simple. You know, not much to it.
No, it's a couple little other moving parts, and it's not too bad. So
yeah, absolutely.
Great. Well, this has been good, Brandon. Again, episode 3. Thank you very much for your time, and everybody. We'll see you for episode 4 soon.
I look forward to it.